to the Web of Deception with Dave Kranzler and Rory Hall. Today is Wednesday, February the 18th, 2015, and this is Financial Napalm. Let's get started. Well, Dave, what's going on with the gold and silver market? It looks like they've been hit pretty hard the past couple of days, and what's your research showing you?
Okay, this actually is not completely unanticipated, and the reason that I say that is, well, to start off with, gold was taken down yesterday about $26 in the space of 2 hours, and during that period, 99,000 gold contracts traded in a 2-hour window from 9 a.m. to 11 a.m. New York time, and that represented 55% of the total contract volume that had traded in gold since 6 p.m. the previous evening, which is when the formal 23-hour trading period begins.
Jeez.
And that volume represented 9.9 million ounces or 287 tons of gold, which was traded out into the market, and it drove down the price $26. Now, the reason why they started doing this yesterday is because India was closed, well, not entirely closed, but the financial markets and the banks were closed in India on Tuesday. And so India's demand for physical gold, their presence did not have its normal bid, did not lend its normal bid to the market. So it made it easier for them to use paper to drive down the market. And then the second factor was the fact that both China and Vietnam, and most people aren't aware of this, but Vietnam is a major gold importing country. Both China and Vietnam are winding down, and they're going to be closed for the next week until next Wednesday in observance of their Lunar New Year celebration. However, India will be back in the market, and there's rumors, and I actually received some information this morning that the import duty over there is going to be reduced from 10%. I don't have specific numbers, but that is in the process, and Indian demand for gold will probably really take off. And I wouldn't be too concerned about the fact that China will be closed for the next week, because India's demand is going to more than make up for that, in my opinion. However, having said that, the import duty hasn't been reduced, although Indian demand is picking back up, and we know that from looking at the ex-duty import premiums that they're paying for gold over there, which have now jumped up to around $12 an ounce, over and above the 10% import duty. So, and that's usually how you measure how strong the demand is for physical gold over in India. You're looking at about 132.
Wow.
And that's just for the major points. The premiums are going to be even higher in the more outlying regions. And I get that information from a private source, a private market newsletter to which our fund subscribes.
That's a substantial number. I mean,
yes. Yes, it is.
About $130, $135.
India's demand for gold this year is going to be ravenous, especially as they roll back even more the import duties that were imposed in July of 2013.
Yeah, I would think so.
But gold was rated again today. Again, it happened at 11 a.m. New York time, and it was taken down another $9 below 1,200, and I think it'll bounce back over 1,200 pretty quickly. But again, 18,000. I just have the numbers for just the April contract today. 18,000 April gold contracts traded in the space of just 30 minutes.
Jeez.
And that represented 24% of the total volume in the April gold contract up to that point in time, starting at 6 p.m. yesterday. So this was 52 tons of paper gold, which is more than twice the amount of gold on the COMEX vaults that are available for delivery.
Only double.
So, and just to sort of wrap this up, everyone who's listening to this knows the markets are manipulated. It becomes more obvious by the day, and I want to read this passage right off of my blog. This is a very painful process for most of us to watch unfold, because we understand how corrupt our entire system is, and we also somewhat understand just how devastating the consequences will be for the entire population of the United States, and really the entire world, when this giant Ponzi scheme blows up. Folks, these are not free markets by any remote stretch of the imagination. These are markets controlled by dangerous criminals who are in the process of stealing everyone's wealth and, in the process, destroying our system. Unless something is done, your children's lives will become a very unpleasant experience. I don't have children, so I don't have equity in the future of this system. Other than that, I was raised with a very strong sense of right and wrong. I'm just the messenger.
That's really well said.
Thank you. Anyway, other than that, Mrs. Lincoln, how did you enjoy the play?
It was pretty awesome. Well, let's go look at some other happy news, shall we, Dave? In the PPI, it's following which is the Producers Price Index. It's following the Baltic Dry Index and doing its own little nosedive or cliff dive. And the housing market is also, it's beginning to tank. And these all tied together don't really paint a very, very nice picture. It's not all unicorny and rainbowy. And the shadow of crisis is anything but past. And I would dare say that it's growing larger and darker. And what do you think there, Mr. Dave?
I just so happen to be in the process of drafting a post for my blog that hopefully I'll finish up after we finish recording this. And it's titled, I Love the Smell of Economic Napalm in the Morning. And first off, I just wanted to mention that on a weekly basis, the Mortgage Bankers Association reports their mortgage application index. It breaks down into purchase applications and refinance applications. And obviously, the purchase applications are the ones that you can measure, probably a much better measure of demand for housing and housing sales activity than the vomit that the National Association of Realtors serves up to us once a month, and the same with the Census Bureau's numbers. But the Mortgage Purchase Applications Index for the last week tanked 7% versus the previous week. It's measured on a weekly basis. And this is 5 weeks in a row now that the Mortgage Purchase Applications Index has declined. And what this means is if people aren't applying for purchase mortgages, they're not buying homes.
And
Second was the housing starts and permits. Now, again, that number is kind of a BS number, and I'll explain why in a second. But both the starts and permits missed what was expected from Wall Street's brain trust. But the housing starts number is really kind of a BS number. I mean, if you look, they report like an annualized number that shows something like over 1 million housing starts on an annualized basis. Well, there's only about 400,000 homes right now, new homes and the run rate's under 400,000 that are being sold. And the reason why that is all it takes for something to be classified as a housing permit is all these home builders all go out and they buy land, and then they file building permits on it with the local counties. And then if they and I'm not joking when I say this, they literally just have to stick a shovel in the ground, and it's considered a housing start by the Census Bureau.
Good gosh.
Yeah. And so it's not really a good measurement of future home sales activity. And based on my in-depth analysis of several different large home builders, and I have a few more that I'm going to do, and those reports are available on my blog. But almost all of the home builders I've looked at have at least 50% of their inventory right now is what they themselves call it speculative inventory. So even if they are building homes, 1 out of every 2 right now that they're selling is a speculative home in anticipation that the market's going to quote unquote recover.
And people talk about the ghost cities in China. Sounds like we've got some ghost housing going on over here as well.
Yes, we will see that phenomenon in this country. I have no doubt about it, and probably coming soon to a neighborhood near you.
Well, I mean, and that was actually happening in Las Vegas, wasn't it? Back in the
Las Vegas
mid 2000s. I mean, in the first decade.
Yes, Las Vegas and also what they call the Inland Empire in California.
Now, if you combine those two pieces of happy news with another piece of really enlightening news, and that is that we just found out today that beef prices have been on the rise, and apparently they're about 24% up. They're up about 24% year over year. That is a very significant increase.
Whoa, 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 wait a minute. But the government's telling me and the Fed's telling me there's no inflation. How can beef be up 24%?
Ah, because they don't count that in the inflation.
Oh.
Yeah, see how that works? So we're back to unicorns and rainbows. But the so if you can imagine, you bought a pound of ground beef last year, and it cost you $4. Well, this year it's going to cost you $5 for that
Not the
same
ground
piece.
beef at my store cost me $5.99 a pound.
Well, there you go. So it's even worse.
There's no inflation and you'll like it.
And I'm going to stay with the Baltic Dry Index because I think that is a huge indicator of economic activity, and I think that it is a direct reflection of what everything that you've just described outside of the gold and silver markets. But as far as the housing starts, the inflation that we were just talking about, the production in this country, all of these things are going to be affected by shipments coming into the United States or leaving from the United States going to other ports. Or am I completely wrong in that?
No, absolutely not. I mean, the Baltic Dry Index is a direct measurement of the relative degree of consumer consumption activity that's going on.
And so when it fell off a cliff back in 2009, just as QE was beginning, the Lehman debacle, the Bear Stearns debacle, the entire global financial system blowing up or on the edge of blowing up is when the Baltic Dry Index began tanking. And it
Yes,
literally dropped how much? It was at 2,200, is that right, Dave?
it was at 2,200 in 2011. It was I had a long term chart up yesterday. It was over like 4,400, I think, before it plunged back then.
And it's now what, at 518 or 513? I mean, it just
Like
keeps
518 or 516 yesterday. It was down again from the day before. It's hit a new all time low since they
all-time
tracked
low.
this as an index.
Okay, so and the Long Shoreman strike that's going on the West Coast would have almost no effect on this in light of everything that we've just described here, as far as the plunge in production, the continued fall in mortgage applications. That
No, absolutely not. I mean, I've heard that out the peanut gallery out there saying, "Oh, the port strike is the reason why we're seeing this latest step down in the Baltic Dry Index," and that's a bunch of horse hooey. Because if you're a shipper, you know that at some point that strike's going to be resolved, and you're not going to lower your prices just because you got ships piling up with inventory. If anything, it's going to create a bottleneck of demand,
right.
in which case there's going to be a bounce back in shipping activity. So there is a direct correlation between the plunge in the price of oil and the plunge in the Baltic Dry Index. And the Baltic Dry Index has been declining since for at least the last 3 years. There's a graph on my website, within the last couple of days that I've posted that shows this. So this nonsense about the port strike causing the Baltic Dry to go even lower, absolutely not. I mean, it really started to plunge when the price of oil plunged for obvious reasons there. So, and this latest small bounce in oil, I believe, is a technical bounce, some short covering. If you were short at oil at $100, you're probably covering it at 50, and it's causing a bounce here. But we're going to see oil turn back lower again. So my guess is we'll see the BDI move lower from here also. And it is a direct indicator, both of them combined, at just how weak the global economy is and just how weak the economy in the U.S. is.
And there you have it. I couldn't agree with you more, Dave. the situation in Ukraine, and that is not improving by any stretch of the imagination. That is taking a turn for the worse. We just sent over, what was that thing called? A tank buster?
Yeah, I just saw there's a report out. It's on Zero Hedge that the U.S. is shipping tanker buster bombers over to Europe. And apparently, that equipment was requested in response to what is being promoted as an escalation in the conflict being driven by Russia, which obviously is propaganda.
Well, I mean, that whole thing is a false flag operation, and now it's kind of gotten away from them, in my opinion.
Yes.
And it's only going to get worse because at this stage, I don't think that the United States, that the State Department or the warmongers can back down from their stance because they've painted such a really
They won't
ugly
back
picture.
from their stance. There's egos involved here now, and that's worse. I've come to the conclusion a few years ago that the addiction to power is more powerful than the addiction to heroin.
That's saying a lot.
Yeah, but just, I mean, if you just study history, you can see guys will go to war in lieu of having to give up power.
Well, they are sociopaths and they are crazy.
Yes,
Plain old fashioned garden variety crazy.
Insane criminals.
Insane criminals.
Maybe just to wrap this up and sort of tie it in back to the opening where we talked about the hit on gold. I mean, probably the biggest motivation right now and why they're trying to prevent gold from achieving a true free market price discovery level and why they're trying to keep a lid on it is that the Fed and our government and Wall Street is shoving this story down our throat that the economy is improving, that there's no inflation, and we've got the geopolitical problems under control. And so just look at the stock market. It hits a new record almost every week now, almost every day. So things have to be going well, right? Well, if they were to let the price of gold trade freely, and if the price of gold in that case were to move a lot higher, which everyone knows it would blow up their lie. It would blow up their fairy tale that everything's fine in this country. And that is why they're hitting the price of gold. And it just so happened, as I discussed and described at the beginning of the show, that yesterday and today were opportune times for them to smash the price of gold ahead of India coming in and moving it higher, and also probably some of these geopolitical events that are starting to boil up again, causing gold to move a lot higher from here.
Well, that is a very good synopsis there, Dave. And I once again, I would agree wholeheartedly that if they don't keep the price of gold under control, then the genie will be out of the bottle.
That's right.
So, and they can't have that. And with that said, I appreciate all the time and all the wisdom, and we'll pick this up in a day or so and take it from there.
Well, it certainly takes time, but only time will tell if it's wisdom.
Well, all righty then. But in the meantime, everybody get your unicorns and your rainbows ready because here they come with some more propaganda. And Dave, I will talk with you soon, and I hope you have a good afternoon.
Thanks. Sounds good. You too.
All right. Bye-bye.